In just a few hours, Bitcoin wiped out billions of dollars. And XRP's fate followed almost instantly. A single violent move from the market's anchor asset created an echo felt across every corner of crypto. And here on XRP Daily Brief, we take the time to break down these movements with clarity, precision, and calm analysis, even when the market feels chaotic. Today, we're exploring why Bitcoin's crash unfolded the way it did, how XRP reacted with near-perfect correlation, which hidden indicators matter most, and why this moment could be far more important than the chart alone suggests. Later in this video, we'll uncover a market signal most traders ignore, one that might shift how you interpret this downturn. Before we start, let me ask you a simple question. If Bitcoin drops 11% in a matter of hours, how deeply do you think that shock affects the rest of the market? Share your guess, because the real answer is more powerful than you might expect. Let's take this one step at a time. When Bitcoin falls sharply, altcoins rarely move independently. Liquidity drains, sentiment shifts, and traders seek stability by selling riskier assets first. XRP didn't fall because of internal weaknesses. It fell because the market as a whole was seeking safety in real time. During panic, correlations tighten, and fundamentals temporarily fade into the background. In stress moments, liquidity decides direction. Bitcoin's decline to $90,369 was not spontaneous. It was the result of an overly leveraged market finally breaking. Open interest was elevated, funding rates were stretched, and traders were positioned aggressively long. That created the conditions for a cascade. Once the first liquidation hit, the rest followed with mechanical precision. Leverage doesn't create volatility, it amplifies it. XRP's fall to $2.15 might seem modest compared to past swings, but context is everything. During systemic movements, support levels behave differently. They weaken quickly, and order books thin out. A level that normally holds becomes fragile under stress. The market message is simple. During a broad downturn, technical levels lose authority. Crashes often begin with emotion, but they escalate because of automation. Stop losses trigger, margin calls force exits. Positions unwind rapidly. Traders who believed they were safe found themselves removed from the market without warning. This is the mechanical side of fear, a chain reaction that leaves little room for reaction. Leverage is a silent risk until it becomes a loud one. XRP's trading volume falling from 5.5 billion to just 3.4 billion signals something important. Liquidity dried up, and when order books thin, even moderate selling pressure causes deeper price impact. This is why certain altcoins fall harder than Bitcoin during volatility. They don't have the same depth. Liquidity tells the truth before price does. Market crashes aren't simply mechanical events, they're emotional ones. Fear spreads fast. Traders don't react to price action, they react to each other. And once panic begins, even rational investors can make impulsive decisions. Understanding this behavior is crucial. Charts reflect emotion more than strategy during moments of uncertainty. Your most valuable tool during panic is discipline. With XRP's relative strength index near 38, we enter a zone where selling pressure may begin to weaken. It does not guarantee a reversal, but it does suggest that the recent move is more emotional than structural. Oversold conditions often indicate exhaustion within the trend. Fear tends to overshoot before it stabilizes. A strong downtrend doesn't always mean a prolonged one, but it does mean the force behind the move is real. An ADX above 30 shows that the market is committed to the direction. When you see rising trend strength combined with oversold momentum, you get a tension point. These moments often precede sharp pivots. Strong trends don't fade, they snap. Altcoins don't follow Bitcoin out of habit. They follow because the entire system is interconnected. Bitcoin anchors liquidity. When the anchor drops, the rest of the market adjusts instantly. XRP's fall was part of a synchronized response across the ecosystem. Understanding Bitcoin's liquidity cycles is essential to understanding XRP's behavior. During heavy selling, someone is always buying. large accumulators tend to step into fear with a level of calm that retail traders often struggle to match. During this downturn, on-chain flows hinted at targeted accumulation. In every panic, wealth doesn't disappear. It moves. If you find this breakdown helpful, consider liking the video. It helps this analysis reach more people who rely on calm, data-driven insights. Funding rates, implied volatility, and options skews often reveal more than price candles. When funding turns sharply negative and volatility spikes, it reflects not just selling pressure, but emotional pressure. These hidden signals expose the true depth of the fear. Follow the metrics the crowd ignores. Oversold conditions in XRP often precede sharp recovery swings, not immediately, but predictably. Panic-driven declines tend to reverse once emotional selling fades and liquidity stabilizes. The key is patience, not prediction. Great entries don't feel comfortable. Ethereum, Solana, and Cardano each reacted differently to the Bitcoin shock. Their volatility profiles aren't identical. The differences reveal how sensitive each asset is to systemic stress. Watching these divergences is incredibly informative. The way altcoins fall tells you how they will later recover. When markets fall, institutions don't panic. They rebalance. Exposure gets reduced, risk gets recalculated, and short-term selling pressure increases across the board. But institutions also tend to re-enter earlier than retail once conditions stabilize. Smart money leaves early and returns early. Retail traders often make the same errors, reacting emotionally, selling lows, chasing highs. These mistakes come from fear, not analysis. Once panic cools, regret often follows. Emotional trading is expensive. Staying rational during volatility is a skill, not a coincidence. XRP's short-term projections still point toward recovery, with estimates around $2.49 in the one-month horizon and $3.37 within a year. Forecasts are not guarantees, but they reflect underlying sentiment. Volatility doesn't erase long-term structure. Strong assets recover more often than they collapse. XRP's current correlation with Bitcoin is strong, but history shows phases where XRP diverged due to specific catalysts like regulatory developments or utility expansion. Correlation is a phase, not a permanent condition. Innovation breaks correlation. 3 signals usually appear before markets recover: stabilization in Bitcoin dominance, cooling liquidation levels, and quiet inflows to altcoins. These signals often emerge long before price action becomes obvious. Markets whisper before they turn. This crash wasn't just a violent event. It was a market-wide stress test, one that exposed fear, liquidity weaknesses, and structural correlations across the system. But inside this turbulence, several signals now suggest that panic may be exhausting. Here on XRP Daily Brief, we break down these market moments with clarity so you can navigate volatility with confidence instead of emotion. Stay observant, stay informed, and stay patient. This content is for research and informational purposes only, not professional advice. Consult a qualified expert as needed.